on the computer. Okay, guys, welcome to today's partner solution. So this is a partner solution in relation to a product that's on the LightYear Surge app. It's been on there for a little while now. We've been working closely after we've taken some member feedback in relation to improving that tool. I've done had a few meetings with Craig on it. His team's, I know, done a lot of work. I've played around with it again, and it's in a very good spot now. We've also developed a list of FAQs around valuations and the valuation tool, which is fantastic. I've gone through them all. They're really helpful to get an understanding of each part of the tool and when you should use it and when you may need a custom valuation, things like that. So we're currently finalizing putting on a button on there also to allow you to go from what I call the level 1 or level 2 valuation, which is the tool we'll show you today, and then where there are circumstances where you may need a more customized solution in relation to valuation. So there's a button that will go through effectively very similar to where you get legal review from LightYear Search app. So if you're creating the document, you'll get a legal review. You click the button, it goes through to Abbott-Family. They arrange a meeting with you and your client and to go through and actually customize or review the documentations for you. So there'll be an option there in relation to that. So I'll just go on here. So I've just got a couple of slides. So I won't run through, obviously, my background. Everyone knows me. I think we've got about 200 odd registered for today, which is great numbers. So I won't run through my bio. For those who don't know Craig's the CEO and founder of Succession Plus. It's the largest business succession exit planning consulting firm in Australia. We do a lot of work with Craig on employee share plans for LightYear Doc members and their clients. But Craig is the leading brain in that space in the country. So I've got a few more ready to come through as well, Craig. I'm talking to someone today in relation to one that's ready to go. So some really exciting stuff. We use this tool a lot within our business for many reasons. We use it in our direct accounting firm, which I don't have a lot to do with the day-to-day running of that anymore, but our direct accounting firm uses it for reviewing client files on an annual basis. And I know you're a great believer in doing that, Craig. It's a great thing to go through and go, okay, let's value your business now, see where you're at. And if we play with some of the different metrics, let's see what impact that will have in the potential valuation. Then in 12 months time, 6 to 12 months time, let's review it again. Let's see where you've got in relation to that and do another valuation. I've recently, as I said, I've sort of stepped away from our direct accounting firm to concentrate on our B2B businesses, which we provide into the accounting and advisory network. But I brought on a chief operating officer whose background, he had his own CPA firm on the Gold Coast, but his background is in business coaching. So I've just started showing him this tool as well and said it's great because we're going to roll out a lot of coaching stuff through our B2B stuff and also through our client base. But I was just showing him recently and said, what a great tool in relation to hooking into Xero or other financial information and to be able to review it as part of that whole business coaching package. So there's a slide on relation to some of our partner solutions we've got on there. I won't go into that, but providing solution strategy and support to be your best. So today's webinar is on the Succession Plus Business Valuation Tool. It's available for LightYear Docs members through the Surge app, which I'll bring up in a sec, and we'll sort of run through that. Do you want to add anything in relation to that, Craig, before I jump in and show my screen on the tool?
No, look, I think it's just, you made the point earlier, it's just a really good conversation starter to have with business owners, just to sort of say, okay, do you know what your business is worth? If not, and most of them will say, no, I don't. If not, let's sit down, run through a valuation. It's quick and easy. It takes sort of 15 minutes, get the data from your Xero file, answer a few questions, get a valuation, and then actually have a conversation about what can we do about improving that valuation going forward. Because the valuation is just a number, right? It's nice to know that your business is worth $3 million, but most people should be asking, well, how do I make it worth $4 million? And it's not just about growth. It's about what are those risk factors? What are the other areas that we should be working on and improving? And I know, I saw, obviously we use LightYear Docs in our business all the time. I saw the other day, there's, some new HR documents. That's a good example of one of the things that actually drives the valuation down. If you haven't got documents up to date and right and compliance and all those things, that's a risk factor and it affects the valuation. So I think advisors and accountants, should be using this as a tool to start a conversation with clients and see what else they can do to help them.
That's a great point. It's always good to have a conversation starter. And as you pointed to there, Craig, we've got, I think it's over 96 or 97 HR suite documents coming out. I'm doing a media release on it, and actually our We Love B2B businesses has been doing a significant amount of work with Ash in relation to that rollout. So it's a co-branded rollout, and I'll also be running a number of effectively a mini series on HR where we were talking about employees, things like employee recognition, which goes into employee share plans, short-term bonus incentives, long-term incentives, the great resignation turning into the great recognition, and also ways to attract staff now, which involves things such as long-term incentives, but also how to write the job ads, what we're doing in relation to Seek, which is successful, and the results we're getting in that space. So I know there's been a lot of people I've been speaking to in that, and they're really looking forward to that side of things. So what I'll do is I will jump into, everyone's aware, knows this is the LightYear Docs website. You obviously can access it from your app. We have our own app also rolling out through We Love Group soon that will have access for Eventum Optimum, We Love Accounting, We Love Bookkeeping, We Love Lending, We Love Legal, which does all our mortgages and PPSR work for Eventum Optimum, but all that B2B accounting stuff. So we'll be contacting and dealing with people through that. Effectively, you'll work on the LightYear Docs app. You'll be able to send a request and it'll come straight across into our app. You'll see your team there and it'll workflow everything, and you see where every single job's at and through the process, and whether it's sitting waiting for you or waiting for us to do something. So we hope that should be out. We're just finishing at the moment. So I think it's up on the App Store. We're just finishing the last little parts of it. So you log into Surge. Mine logged in straight away. This is actually my own Surge. So as everyone knows, you click on the buttons to go into things such as the document wizard to access the LightYear Docs documents. But what we're going through today is actually our quick link section. So a number of things that I'm involved with, obviously mortgage registration and PPSR as a link. We've got a link to change GPS. We've got a link to the Business Valuation Tool. This Success Hub, if no one's aware of it, this is absolutely brilliant. It goes through tips and tools, videos, provides work checklists and material to provide any solutions or services and go through any of the strategies with your clients. There's a whole heap of ebooks and everything through there. So we've got an ebook on employee share plans as well. So this is what we're going through today. So what you do, click on the Business Valuation Tool. There's a link that you can provide that will give you FAQ, which I'll pull up the link of that in a second. But it's so easy, isn't it, Craig, this whole process? So you jump into here. All you have to do is effectively purchase report. I don't have a token, so I'll actually use one. So it jumps in. Valuation pulls up. So there's three different methods. You can manual entry. So if you've got the financials in CSV or anything, you can actually enter them or pull them through to there. There's a link to QuickBooks and there's a link to Xero. 99% of our work's in Xero. We do have a few QuickBooks clients, but I'll just click the link to Xero and jump in through there. We will allow access. So it has an API straight into Xero. You select the entity you want to use. I will just use, what will I use? I might use, I'm trying to look at one of my own. That won't matter. I'll use this Get Tracked app. This is not going to provide a big valuation because there's not a lot of information in there, but this is just to show you how the tool works and everything. So if I go allow access for 30 minutes, it's now linking that API. This is a personal development company of mine that we've got capital raise going on at the moment. But business name, CPD, mate, or leave Get Tracked. Effectively pulls all that information through, doesn't it, Craig? It makes it quite easy. So you can update that. Often we're doing valuations for other accounting firms or for our own clients. So we'll change that name, or it might be my business partner's name, and then we'll select accountant consultant. If you're doing for the business owner director in front of them, then you'd obviously select that. So I'll select accountant consultant today. because that's pulled the name through from that actual company. So I'll say that Craig West is doing this, and we'll just leave it as Michael J. Accountus. We can put in my mobile phone number. Reason for valuation. So there's a different number of reasons. How does this impact the valuation, Craig?
This particular box doesn't. It slightly changes some of the format or some of the wording.
Okay.
One of the requirements, and we've actually already had a question in the Q&A about APS 225, which is the standard for valuation. So the first thing is that this report does comply with APS 225. And one of the things you have to do to meet the requirements of APS 225 is state why you're doing the valuation. So if it's just a conversation with your client about how to improve the valuation, it might be performance measurement. But if it's for stamp duty or estate or taxation, you have to state that here, and that then gets inserted into the report so it meets that qualification.
Understand. Excellent. So we'll do seller business share. Industry, I'll just say training. No, that'll do. Number of owners. There's 2 owners of this. About 100 square meters. 2 FTEs, month end reconciled should be, let's say June 2020. So then you go through effectively a number of non-financial metrics, don't you, Craig? So, and you answer these based on your best knowledge of the position, obviously working with the business owner or the accountant or advisor in relation to these. And based on each of these results, Craig, how much do each of these triggers impact the valuation compared to, say, the financial metrics that come through, so the P&L and the balance sheet? Well, is there a certain weighting that's put to them, or?
Yeah, they are weighted. The algorithm does weight them, but basically, if you treat them as being equally weighted, what this is about is trying to identify all of the key risks that would impact the multiple. Okay. So if you, on every single one of these, if you had a perfect business, and let's face it, there isn't one, but let's say that you had a business that's been around for ages, it's got all its systems together, it's not dependent on the owner, it's got fantastic compliance documents, its operations are managed beautifully, then everything would be strongly agree, and that would mean it gets the sort of higher end multiple for that particular industry. If you said here, we disagree, we haven't got a great business, hasn't been going for a long time, we're not consistently profitable, we're owner dependent, then that would mean the valuation's pushed down. This all feeds into the main algorithm that works out for this industry, what's the sort of typical multiple. And then for this business, what we're talking about here is what's called company specific risk. What are the key things that are impacting the valuation? And the formula in the background will then go and use those to calculate what that multiple should be.
Yeah, so just showing some of the answers here, and I'm happy to talk about this because this actually is an entity that I have ownership in. It's a startup entity. Just to give everyone a bit of a background, it actually owns CPD, mate, which has contracts with LightYear Group, Sapeppa. We're talking to the medical industry, Engineers Australia. We've got a heads of agreement with Engineers Australia for the app. We're just about to do a capital raise in relation to it. So it is an app that not only tracks CPD, but allows you to push training out via it. It is agnostic in behaviour. So if you're a member of the Chartered Accountants of Australia or the CPA, you'll know that each year you actually have to go in and put your hours in, but that doesn't pull hours from anywhere else. So we're completely agnostic, and we're actually going. We had preliminary chats with the CPA as well. There's a significant amount of interest in it. So it tracks CPD across multiple associations, industries, and then where it's really powerful, it gives you the ability to, if you're a trainer. So if Craig wants to do, we've recently done a succession event in Sydney. For the CPD for that, if we could have actually gone in there and say, hey, Michael is deficient in hours for employee share plan training, and it'll allow you to advertise and push training to them, whether they want to take it up or not, and also discounted training and stuff. So it'll be based on the app where we're looking at with associations. So Pepper's signed up on the basis that it has built in our annual fees or monthly fees. So Pepper members will get a version of it that will track their CPD and have all their certificates saved on there. So everything will be pushed through there. So hence why I've said the business hasn't been around for a long time. I'd strongly disagree because it's a startup. We've been the owner of the businesses for a long time. Well, I'd probably agree to neutral because we're the only owners. Our business has grown each year. I'd say Disagree, because we've got a lot of costs, just development costs running through at the moment. We're starting to. Owners do not work more than 50 hours. Neutral. Customers deal with the business, not just to the owners. I'd strongly agree with that. It's not owner dependent. The business has consistently been profitable. I'll probably disagree because we've only just started to have a small amount of revenue flow through. The business could keep going without the owners. Probably disagree on that. Our market offers new opportunities. Strongly agree. There is little competitive rivalry. I'd say I agree. This is hard business for new competitors to get into. Agree, because the costs. Substitute products, services, or technology are not a threat to us. Disagree. Our market is growing quite rapidly. We'll leave that as neutral. We don't need to advertise much at all. I'll leave that as neutral as well. Loss of our top 3 customers would not be that serious. I'd probably disagree with that at the moment whilst you're a startup, because you don't tend to have more than 3 customers as you're testing and everything. More than 50% of your customers are return buyers. Yeah, I agree. Our website generates good business for us. Strongly agree. Government regulation is good for our business. Definitely strongly agree.
Yeah.
Where they're mandating CPD and training and stuff, it's very huge. There's a little chance of legal action against us. Probably neutral. Our plant and equipment is up to date. Neutral. We can choose from a different number of suppliers. Probably neutral. Bad debts are rarely a problem. Agree. We could not ask for better employees. Of course so. I'm involved. We have regular structured employee training programs. Not yet. We don't need much working capital to operate. Strongly disagree. We have good management systems in place. Neutral. Our good business processes are well documented. Disagree. Cash flow is rarely a problem. That'd probably strongly disagree. All startups are dependent on cash flow. We increase our prices at least annually. Neutral. We have a very good location for what we do. Yes, we can operate here for a long time. Yes, we don't just operate in our local area. Strongly agree. So this next step is where the financials start to pull in. So if I expand the P&L, it'll have profit and loss financials in there. If I expand the balance sheet, it'll have those as well. The tool's really powerful. So what that's done is it's effectively just pulled them through from zero. As you can see, we're a startup. We've only got a little bit of revenue starting to flow through there. And it's probably only about 2 or 3 months worth of revenue just started to come through, which is a good sign for where we're at. But it's pulling all of that data through from zero. It pulls the balance sheet information through. You then can go through and this is where you can make your add backs or deductions. So if there's a tax expense that should be management fees to related entities or spouses. So where they're trying to do tax effective fees paid through, actual rent paid, accelerated depreciation, where obviously instant asset write-off has been prevalent in the last few years, but it actually impacts the valuation because it's hitting the P&L and it's a non-cash item. And some of those have been quite large. Do you want to add any comments to any of that, Craig? Oh, you're just on mute.
Yeah, I think most people are familiar with this. Lots of add backs in private small businesses. People have got non-business related expenses in there. The big ones typically are if they own the building or they've bought the building in a related entity, then the actual rent needs to be reflected, and salaries, of course, to owners. Most owners don't pay themselves a full market salary. So there's adjustments in there for that, as well as add backs for legal fees and all the normal sort of things. The idea here is to get to a normalized profit level. So what's the actual number this business is making in a real market sense? And then we use that for the valuation.
And the best way to do that, the starting basis for me always is I'll grab the P&L and balance sheet and go through and review it, and effectively, generally I'll highlight areas that I want to then have a discussion about and question. And obviously we'll also have a discussion with the owners or the accountant in each of those areas where they can add some color behind it. But if there's anything that my first starting point, generally I'll go through and have a look myself. Is there anything that jumps out at me to discuss? But then we'll also run through a thorough discussion as well, so we get it right.
It's also a good conversation to have, Michael, because that's some of the stuff that, if somebody's looking at preparing their business for sale, for example, the owner is going to do this. The buyer needs to do it as well, obviously. So getting the owner to understand that some of these things are actually hurting their valuation because they're not paying a market salary or they've got all these personal expenses or whatever else. is a good conversation to have to get them to understand what that means. It's fine to do that to save a bit of tax or whatever it might be, but you've got to understand that that's going to impact your valuation from a buyer point of view if they're looking at selling.
That is correct. And we actually use this in our business turnaround business a lot, this tool, because we use it for where we've got to sell a business, because it's important that it's sold at market. And there's supporting market value for that business. So if we're going to sell it across to a new restructured entity, then it's been very paramount that we go through and do this process appropriately and accurately to ensure that we get so that we're not selling something that's not at market value across to that new entity. We find it very good. So is there any, before I press finalize valuation, are there any Q&A questions on that? Will it integrate with MYOB, Craig?
Not yet. We were focused on Xero first. We got a lot of people requesting QuickBooks, so we've added that in. But if you can't integrate with MYOB or anything else, then you can manually input the summary data. So you don't have to type in the whole P&L. There's a summary sheet. You can put that in if you have to manually. You can also import a CSV file, which is the next question there. And there's a template. We can give you a template to do that, so you can actually just type it into the right format, export it out of MYOB, format it for CSV, and import it in.
Yeah, I often use the CSV. We might actually have a link up there on the CSV so people can download it when they get it through that. So does the report reference the metrics or entered to get the outcome value provided?
Yes, it absolutely does. So obviously and we'll see a report in a moment, but the reference comes back to these metrics. That's one of the improvements we've made recently. And the next one is, if you scroll down to the bottom of the screen, actually, Michael, there's actually now a new button down here which says save progress. So that wasn't there before. And I know there's a couple of questions here about, when I finish it, I can't go back and amend it. You can now save that, go and have a look at it, come back if you need to, or maybe you just haven't got the right information from the client, so you can't finish it. You can actually save it now and come back to it later. Yeah,
that was one of the big areas we worked through when we were talking about improvements and stuff, wasn't it? Based on feedback, is that that people couldn't come back to it. And I know it was a frustration I personally faced as well, was that I go, oh my God, I can't get back now. And I have to start the whole process again, which is fantastic. So we'll show you how quickly this is. Okay, finalize. As a nice little video with Craig up there if people want to watch. And as it's generating a report, this is quite quick. Look at that, bang, finalized. Now I have the opportunity to download the report. It'll be down here, I think. Is this today? Looks like it, yep. Pops up on my screen. I can obviously download it, but this is in the background. So great title page there with the date, private valuation report, introduction into it, introduction to Succession Plus and process, capability statement. Do you want to run through this as I go through each page, Craig?
Yeah, so these are some of the key things that you need as part of the APS. You can see APS 225 reference down the bottom there. It's a limited scope valuation report. It also has to list the capability, including things like licensing and so on, of the people that have prepared the report. So we sign off on that for you, so you don't have to worry about that. And then it talks about the fact that it's a limited scope engagement. So it's not we're not doing an audit of the financials. We're taking them as read. We're taking the fact that if somebody manually input them, etc., then we can do that. And then the next sort of couple of pages here.
Just stopping on that, Craig. I mean, in terms of how does it impact for, say, we've obviously got a large amount of accountants and advisors here in relation to PI for our accountants. So they're preparing.
Yeah. So this report, you'll actually see this report's actually been signed off by us, and our PI covers the valuation report. Yours doesn't need to. And one of the key things about the limited scope and APS 225 is it's got to be independent. So if you sign it off as the accountant for this particular client, or let's take the ridiculous example, this one that Michael's done is a company that he's actually a shareholder and director of. There's no way you could say you're independent in that case, but you don't need to worry about that, because we'll actually sign off on it and say that we've done the report, we're independent, we've been paid a fee to prepare it, but we have no other relationship with this particular client. So that solves that issue for most people. There are a couple of people asking about putting your own logo on there and so on. We did look at that, but actually most people said, no, we'd rather you sign off on the report, because obviously if it's got your logo on it, I can't sign off on it. You would need to sign off on it. So most people are sort of saying we'd rather have an independent report signed off independently that meets that requirement. And I think that also then gives you, the fact that you've paid for it, you've gone externally to get the report.
Yeah, it's a very valid point, because we actually do through that our entity Eventum Mockman, we do a number of valuations for other accounting firms and advisory firms who do have access to tools such as these, but would prefer, and that sort of echoes what you're saying there, Craig. They actually would prefer, okay, you're an independent entity from our client. We're happy to do them, of course. And there's obviously a fee in charge with that. Generally, we charge about $1,500, and we, as you can see, I mean, it's transparent. We paid $275 for the tool. However, there's a lot that goes into. It's not a matter of just paying $275 and downloading from zero. There's a lot that actually goes through the process and thought process and supporting information that we need to be comfortable with in relation to downloading and preparing that report. So that then goes, so market valuation considerations, change in capital structure, ownership, capital gains rollovers, company divestments, acquisitions, etc., entry and exit. This then gives a great executive summary, just a little snapshot. So the name of the business, Get Tracked App. It trades as CPD Mate. I've just quickly selected technical and vocational training just as one as we're going through. So sell a business share, name of person requesting the valuation, Michael Jeffriess of Get Tracked. Background, succession process has been engaged to provide a market valuation. This is what Craig was saying before, as of 30 June. Sources of information are the P&L and balance sheet from the business accounting system. It's Succession Plus doesn't warrant its inquiries have been identified effectively from the person who's done. It's not an audit or an extensive examination or due diligence investigation. And what your requirements are. So obviously,
they're all things that are required for APS 225, Michael. That's really important.
Independence of value, which we were just talking about before, and with the approach that's done. So as Craig mentioned, APS, these are all the requirements in relation to the approach, the process, the methodology, the liquidation, and so that then discusses each of those methodologies, the selected methodology. And we get a valuation. Obviously, this valuation is not going to be fantastic because this is a startup and it's only just recently started up. But you can see it's brought through and flowed through information from the financials. I'm happy and transparent in relation to showing any of that, but that just gives you an idea of the financial summary. It then shows in the adjustments. We didn't make any adjustments then, but if we had, you would have seen them come through here where I would have made adjustments in management fees or into the asset write-off. Market remuneration, etc., etc. So it's great little snapshot of any adjustments that have been made. Calculations from the add back, so it gives a weighted average NPAT, which is very low, as to be expected, and what the valuation is based on. If you want to talk about that valuation, Craig, in terms of enterprise value, the net asset value, etc.
Yeah, so there's two things there. The first thing you'll see is that future maintainable profits. So that's a weighted average across those numbers. Now, obviously, we only had 1.5 years sort of basically there. The capitalization multiple, that's where we get all of those risk answers feeding into the algorithm to calculate what sort of multiple could we expect given all the answers Michael put in to the system. As I said, if he answered all those, I agree or strongly agree, we've got everything in place, then the multiple will be higher. Obviously, this is a startup, so some of those things aren't yet in place, and therefore the multiple's a bit lower. But that's sort of pretty average, actually. That's sort of middle of the range type multiple you'd expect, and you get the enterprise value. Now, that then sits there as the goodwill value for the business. Then you get a fair market of deemed equity value. So that basically looks at the net tangible assets from the balance sheet, which is there, and you get that figure. Now, depending on which what you're using this for, if it's for example, if it's for an employee share plan, then you need to include the net assets in the valuation. But if you're selling the goodwill of a business, it might be that you don't include the balance sheet because you're not selling the company shares, you're selling the goodwill assets. So that's why that's broken out like that, just depending on which purpose you're using it for. And
that's effectively the end of the report. So sorry.
Yeah, that's the end of the report. So that gives you the breakdown, and that's the output that you get. Now, what I do with that is sit down with the client, talk through it, explain what it is, why it's that number. the best conversation to have is around that 2.93, and you can say that that is probably a little bit below average in terms of multiples for a small business. This is a startup, so we expected that. But what can we do now to work with you to help improve that multiple going forward? If it's for compliance or taxation or whatever, then that, the report's everything you need and the client can use that in terms of those compliance requirements. But I think it's more about starting an advisory conversation, going through those non-financial questions that we just answered with the client. That often, that only took us, 15 minutes to do it there. We sort of flicked through that pretty quickly, but it could be that takes you an hour with a client and you're making a whole stack of notes about things that they don't have in their business that they should have. Documents they need, systems they need to set up. Maybe you want to sit on some sort of advisory board to get their compliance and governance sorted out. I find it opens up lots of opportunities to have a conversation about what else you could do to help them.
And even looking at your balance sheet, we might have been for, say, this startup. Obviously, we've already signed a couple of agreements recently, and we've entered into a heads of agreement on a couple of others that there's some value in relation to that. And so, do you get that valued? And effectively, the access to the databases that's providing as well in terms of future revenue and stuff. So you could be sitting here with a client going, hey, we probably should be looking at doing a brand valuation or something else to add to your database, which then increases your enterprise value.
Yeah, absolutely. Yep. Got a stack of Q&A here, Michael. If you want to start going through.
I'll just stop that share of that and jump into the Q&A. We've done on that. Done. So does the report reference the material? I think we've answered that, haven't we? Oh, sorry.
Yes, it does. Yep. You can see that now in the report. There's a table there.
Done. One of my issues in the past has been none of the data comes through in the final report. Yep. So the data is showing in the final report, as we said. Any chance of HandySoft integration?
Not at the moment, but if there's enough demand for it, we can build it. These integrations cost a fair bit of time and money. We haven't had a lot of requests for that. I'm not saying we won't do it or can't do it, but if there's a demand for it, we might look at it down the track. It's not there at the moment.
It's the same as LightYear, Craig. I mean, we often get questions in relation to things, but it comes down to demand because you hit the nail right on the head. There's a lot of development costs in relation to doing all these APIs, and then you got to work out, is there a cost benefit in relation to doing that? So that's actually quite a topical thing too, David. Do I have HandySoft? I think I saw comments on Facebook groups, Accountants Brains Trust Facebook groups this morning, where HandySoft it was part of the Fin review today. HandySoft's charging a $2,000 exit fee for people trying to move across to Xero and XPM and leave HandySoft at the moment.
Wow.
So,
goodness me.
John, are there explanations for what you mean by various labels, e.g. financial assets?
Yes, there is, but you can't see it. That's probably a very good suggestion. We could easily put if you hover over a certain term. It's not there at the moment, but I'm happy to. That's easy to build, so I'm happy to do that.
That's actually a good one.
Yeah, I agree. It's a good one. I'll have a look at that.
This is a great question from Peter. Can this be used for court purposes? And I know we've discussed this before. My understanding through discussions that a number of valuers are not doing this work anymore. Peter, just touching on your last, I'll let Craig talk about the court part, but touching on your last part, certainly we've found, through EO, we used to have a large panel of valuers, and that has shrunk over time. There's a lot of valuation work they don't want to do, and they like doing the very easy P&L type valuation, don't want to touch anything else. So
yeah, look, in terms of court purposes, yes, this report complies, but what I would say is I wouldn't go to court using this report alone. What we are adding, and we're about to add on the LightYear, the Surge platform, is also a button, as we mentioned before, a bit like you press the button for Abbott and Morley to get involved and do a legal review. There'll be a button to do a valuation review, have a meeting, have a discussion about what you're going to court for. We've just merged with a guy called Lockie McCall, who runs a very well-known valuation practice down in Victoria. That's now part of Succession Plus. Lockie will be supporting these valuations, but also if it gets more serious and you're going to end up going to court for a family law matter or a estate planning issue, then you'd probably want to go through in a bit more detail and just produce that relevant type report. This would certainly be a good starting place, but next step would be then to go through there.
Yeah, 100%. I agree. It's And that's something that we've been discussing over the last couple of months, wasn't it? Like that level 2, level 3 next. Based on your requirements and stuff. So, John, what is the typical fee to prepare and deliver the report to the client? Like, John, if we're using Xero, we're probably sitting about the $1,500 mark. If we have to, it depends on the financial records and the information that's available and how much additional work might be required in gathering any of that information. But if it's a clean file and we have access to be able to ask the questions that we need to ask, then you're probably sitting around that 1,500 plus GST mark. What's your feedback in the industry, Craig, in relation to pricing?
Yeah, I think for those sort of, business assessments, performance type conversations, 1,500 odd plus GST or something's pretty reasonable. Look, I have seen valuations when you get into court and, family law, they'll start at, maybe $5,000 and go up to 25, 30. So I think, but always start with this process. If you're charging clients to go through it as part of their annual fee, I would suggest, $1,500 is quite reasonable. And then it's a conversation about what else needs to be done off the back of that.
Yeah, and what a good process to add into your annual review process. Like we use, I'm a great believer in Tim Munro and the Change GPS system because we use a lot, and we've got our annual program we go through in relation to the agenda and stuff when we're delivering financials. But we've now added things such as this onto it and the opportunity to just do a bit of business coaching. And that's the real value that clients are looking for. They're not looking for the compliance numbers. It's the horse is bolted. Obviously, you need to discuss them and review them, but it's this valuation and where they can go to and where they're headed that they're really looking for.
Yeah, that's right.
It's Phil Scandozia. How you going, Phil? Big fan of Phil's. Can you go back and make adjustments once you finalise the report and rerun the report?
Depends how you want to do that, Phil. If you want to go back and adjust the inputs, yes, but you can't just keep doing that and updating the valuation year on year or anything like that. If you've made a mistake, let's say you put in the wrong number or the import didn't work, there was something weird going on with the Xero classification of accounts, you can go back to that save progress button that we had before and update it. But that's not intended for people to just go in and constantly redo the valuation so that it ends up, so you can manipulate the answer to get what you want. Not that you would do that, of course, Phil, but someone else might think about doing that. So you can't do that, but you can go in and correct inputs or change an answer because you got it wrong or something like that. Absolutely.
Yeah, and that's one of the concerns we've done a number of evaluations. People have said, look, we're not happy with how, depending on what the purpose is, how high it is or low it is, and certainly willing to always look at it if there's a valid reason that they can support for us to go back in and adjust or make changes or something that may have been missed, then that's okay. But and certainly I'm not in the game of manipulating to get a result. It has to have valid support and reason behind it.
Yeah, absolutely.
If you want to do an informal appraisal of the business, is there an option to use the app labeled with our logo and name? Does not state it meets APSE.
Not at the moment. That report's the only output at the moment. Again, I'm happy to consider developing something like that, but it would need to be reasonably popular. We need to get a reasonable number of people demanding that kind of thing, because it's actually just a cut down version of that report. We can take out all the APSE requirements, so it's just meets the simple value. It might be 6 pages long instead of 15. So yeah, we could do that, I guess. I'm just conscious, as we said before, of developing too many things that don't get new.
I think it had strength and support having that it meets those standards, and regardless of whether it's informal or not, I think I think it adds some value. How much does it cost for sign off? So this is where we're talking about going to a bespoke. I guess I'll let Craig answer it, but sometimes it's how long is a piece of string. But we have discussed, I did discuss with Craig when we were talking about this idea originally, of potentially having a table of, or an idea around, certain valuations and what they may cost. So I know Abbott-Family has a cost for legal review, but then it also depends on how big the beast is as well.
Yeah, look, that initial conversation is never charged. So if you click on, once that button's there, if you click on that button and say, I need a valuation for estate planning, and here's the client, and here's what the report's produced out of the system, we can then have a look at it and give you a fixed price quote. We don't do any hourly based billing. Lockie will have a look at it, come back to you and say, yeah, a report that meets that requirement is going to cost you $4,000. It's fixed fee. We know what it is, and then you've got it locked in.
Yeah, Peter. Yeah, correct. Cost to create valuation, given that it's a startup. Correct. I was purely going through as a demonstration, just quickly running through and adding through. There's a lot more I would have added into it. That there's significant value in relation to that entity where it's sitting at the moment. Hence why we're going and doing a small cap raise to finalise the development of about $500,000. But it was more just for to show a demonstration of how the numbers pull through and the process and everything, rather than an accurate reflection of the valuation process that I would have done for that particular entity.
Yeah.
The valuation uses NPAT. If you're valuing a company that is now profitable, it has access to significant carry forward tax losses or access to immediate tax write-off concession. Does this distort valuation?
No, we use NPAT for all our valuations, and that's on purpose. A lot of the EBITDA models don't take into account a lot of expenses. You can see some companies where their depreciation, amortization, interest, and so on is substantial. If you completely ignore that from a valuation point of view, it's quite difficult to get to the right number. And of course, that also relates to the reason you're doing the valuation. If you're doing it for capital raising or to bring in an employee equity plan or something, then you would need to take those balance sheet items into account.
Yeah, correct. Okay, so Jason's put in his previous question, the metrics. I know what you're talking about now, Jason. So he's talking about the risk metrics. So effectively those bands that we move across and being summarised in the output report. Or do we need to print screen as we answer these when initially preparing the report? Right, is that pretty easy to just add that as a summary?
It is. I've actually made a note of that question, Jason. I'm happy to add that in. It's not there at the moment. But I'm happy to add that in because and my developers hate it when I do this, but I don't think that's all that difficult to do. Yeah. So I'm happy to add maybe a page or two that's got a summary of those non-financial questions, because that'll help you have a conversation with your client as well, rather than try to print screens on the way through.
Yeah, definitely. That's a good one. Thanks,
yeah,
Jason.
That's a good suggestion.
And Shane's actually said as well, good question from Jason.
Yeah, cool.
Is the capitalisation rate benchmarked against similar businesses or public companies so that it's a verifiable market rate?
Yes, it is. Yeah, absolutely. So that's why we ask you for that ANSIC code in the industry. Technically, we could just ask you to type in, training company or something, but we do get an ANSIC code because that then feeds into the algorithm to work out exactly what multiple are we starting at. So, if we put in software as a service, for example, our starting multiple will be higher than if we put in a coffee shop in suburban Brisbane. You're going to get a different multiple, even though the questions are the same. The multiple that we start with will be different.
Is there any impact, at the start when you put where you're putting that ANSIC code and everything in relation to, because this is actually a personal question from one, but in terms of when it comes up and asks you the square meterage of floor space, I've wondered, does that impact, and what impact does that have if it does impact on the valuation?
Yeah, it does. So the impact around, industry size, number of employees, because obviously larger companies typically have lower risk. They're not as owner dependent. They've got some structures and systems in place. So all of that data that we collect, other than the, the name and the accounting firm, all that data feeds into the algorithm. Obviously, some of it's far more important than others. And at the end of the day, the profit and the financials are the big input, but all of that does feed into the algorithm. Yeah, absolutely.
Yeah, excellent. Thanks, Craig. So once this is finalised and you realise you've made an error, it can't be just, and you need to start another report and pay another $275. It's actually saved now, isn't it?
No, it's saved. You can go back into it. So even if you finalise the report, you print it out, and then you go, oh man, I've made a mistake here. I put the wrong number in, or whatever it might be. You can go back to the saved version, update it, and redo the report.
Yeah, fantastic. Thanks, Craig. Do you have a checklist document to help with the client interview? So you're suggesting a checklist before we actually, like a PDF or something that we download, I assume, that with the client interview before you actually go. So a preparation checklist. Yeah.
Not really, no. We do that in the software, but I don't think that's a bad idea, actually.
No.
To sort of say before you start the report, here's the information you're going to need, here's the things your client's going to need to have with them or no.
Yeah, it's actually good data collection. I sort of send out, because I've been using the tool a bit, and I send out, or I know the questions to ask, but it would be fantastic to have something to fire out and go, we need all of this information, or the more information you give us, the better result we're going to get.
Yep, absolutely.
Thanks for your comments. Cost for review, is that done at the start? We need to be able to quote the client for our time and the review fee. What is the process?
Yeah, I would. What we recommend, or what we normally do, is we would do that valuation report out of the system up front, sit down with them and go through that, and then say, okay, it's worth going through now and getting a formal valuation for tax or a court case or whatever it might be. At that point, we would organise a meeting, which is no cost, with you to talk about what do we need, what's the outcome we're looking for, what's the report needed for. If it's a valuation report on its own, that's one thing. If it's a valuation report that needs Lockie to attend court as an expert witness, that's a whole nother level altogether. So we get all that, and then we quote it up front before you go back to the client and say, okay, you're going to need to spend $10,000 on this next stage of the process.
Yeah, and there's going to be, we hope to have that button live today, but we just had a couple of technical problems at the end this week, and but there will be a button effectively for similar to that legal review button that you'll be able to press or select. So that we'll have that up in the next few days. Change would be only to correct data, I agree. Yep, thanks, Phil. John, do you do bespoke valuations? Yep, we've sort of talked about that. Where once you sell the IP, yep. Hey, Todd, good friend of mine as well. How would you advise we deliver this to our clients, given it as an independent report? E.g., do we send it under our letterhead, just ensure we say we've obtained an independent valuation on your behalf?
Yeah, that's all you need to do is, send a letterhead saying we've engaged with an external party that's experienced and specialises in valuations, and here's the report they've produced for us. Absolutely. So that means we've signed off on it. It's covered under our PI, but you've engaged with us to do that.
Yeah, and I believe, Todd, that helps support that process as well and strengthens that up. John, does your valuation only for business? So the total asking price for the business is goodwill, stock on hand, plant and equipment rights.
So we do, yeah. So we don't include that in the full valuation, but there is a summary there that talks about net tangible assets on the balance sheet and so on. And in the report on, I can't remember what page, I think it's page 12, there's actually a breakdown of the balance sheet items. So you can actually sit down and go through that. Again, that varies a lot depending on the buyer or the transaction you're talking about. Some people want to buy the shares in the company and therefore they get all the balance sheet. Others will say, no, we just want the goodwill plus the plant and equipment, and you keep the debtors, you keep the creditors, you keep the loans, you keep the cash. That varies so much. It's a little bit difficult to customize that into the report. The information's there so you can go through it, but we don't produce that final sort of customized answer depending on the structure. Every transaction's different, so it'd be quite difficult to do that.
Yeah. Warren, you access the tool from the LightYear Search app. So you go in through there and the quick links. So there's quick links to there's about 10 different quick links in there to partner solutions that allow you to click in it. John, hi Craig, thanks for your comments about using NPAT. I agree with you. Yep, fantastic. Lavisha, not a silly question at all. Yes, you are paying Succession Plus $275 for each report. It's not part of your LightYear monthly membership. So each single report you do it very similar to if you shoot out a mortgage or conveyancing work to EO We Love Legal, one of our entities to do, then that's not included in your trust deed to stamp. Then there's a fee for that service to be provided. We do provide that, and $275 is a very great price that Craig's on and off there, is that we do provide similar in EO at pricing at a wholesale LightYear Doc member pricing rate. So that allows you then to make margin in terms of things such as this, where I said you're charging your client up to $1,500 and it's just costing you $275. You can do mortgages for $700 to $900, and then it's up to you whether you just pass that disbursement on or you mark it up and charge $1,500, for example. But yeah, certainly because it's each of those solutions are an external partner solution, then there is a fee involved. Sounds like you've made some good changes since last week. Thanks, Phil. We had, we definitely put our heads together. We had a meeting in Sydney, then a nice lunch at the Mexican afterwards, and it was all based on feedback, which is the same as LightYear Docs. Our documents only get stronger and better from feedback. That's and that's what I love about this community. So we've got the checklist document is great. Add, yep. To devalue, yep. Agree. Perfect. It's very, very, very similar to what we do in the estate planning process, John, where you've got when I'm doing wills or EPOAs, I've got a workbook that I work through to get the data collection, and it de-risks somewhat my process, because I've done the data collection with the client, and then I'm just filling out the valuation process. Would you say it's best practice to sit down with the client, work through the non-financial metric questions at the start of the report? I would, definitely, yeah. Sure. So whether we're dealing with direct clients or an accountant or advisor, we sit down and work through those best we can. Or if we, some of the answers we may know of in relation to business, because we've had discussions previously, but there may be then questions we need to ask the accountant advisor as well. So, as I said, we use this a lot. We're increasing our usage of it, and definitely now that there's been some further improvements, we'll do it even further now. So we think it's a great process. I'm definitely getting our accounting team to roll it out, but we use it in other areas of our business as well. So, and do you have anything that you would like to say just to finish up, Craig?
Now, look, the only other thing is, we have had, we've added some staff into this particular area of the business. So we've got someone full-time now. That valuations at successionplus.com.au email is now supported by someone who actually has both an accounting degree and an IT degree. So they are able to fix most problems. We've had a couple of instances where there was some significant issue with the data and so on, and we've just recreated the report manually for you. So be assured, firstly, there's support there now to make sure you get the answers you need. And obviously the practice that we merged with in Melbourne, who just does valuations, gives us a lot more technical sort of expertise as well to make sure we've got the whole package if you need it to work. And look, I think, some of the stuff that we're doing, I think this gives you a good opportunity to use some of the LightYear stuff to actually implement what's needed with these clients to help them fix their valuation. If their valuation's a bit low, you can go back through the checklist and say, look, there's a whole stack of things there that need to be done. Let's start working on them one by one. Clients are happy to pay for that, in my experience. It's just they don't know what to do. They don't know what to do.
They're actually screaming out for it, and it's a significant opportunity to actually sit down and add value with them and go through. It'd be great if you could do this for, obviously not iReturns, but all your business clients, and go through and add it in, even if you built it into you as an advisory, a total advisory package that you charge them each year. So, and then as part of that, they get this report and a few other services as well.
Yeah, perfect.
If there are a couple of other Q&A, we'll just quickly look at them and then we'll wrap it up. Peter, suggestion is we need to understand how much time we will be spending with your quote. Can we have a list of things we require? Assume that the profit would need to be. You'd provide all of that from that level 2 custom meeting, wouldn't you, Craig?
Yeah, that's right. If we have a custom meeting, we'll get all that together for you. Absolutely.
Yeah, definitely. Rio, is there a document where we can whereby sign a debit loan account from one individual to another? I'll take that offline, John. Yeah, there is the ability to do that. So thanks, Craig. I'm really happy with where we're at with the valuation tool now. We've had some great feedback there, as well as some other suggested changes that will be looked into. I appreciate everyone joining us today for this partner solution. And thanks for your time, Craig. Thanks, everyone. And we'll see you next time.
Thanks, everyone. Have a good day.